In today's rapidly shifting financial landscape, few developments have sparked as much attention and debate as the potential revaluation of the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. These two currencies, long seen as undervalued by currency watchers and international investors, are now at the center of what some are calling a possible once-in-a-generation financial reset. Welcome to Iraqi Dinar Info, where our mission is to provide real-time updates, credible financial insights, and well-researched analysis focused specifically on these currencies and the larger economic and geopolitical trends shaping their futures. Our role is to serve not only currency investors, but also financial strategists, policy observers, and anyone following the global economic realignment currently underway. This is a critical moment, and our commitment is to keep our audience well-informed through facts, not hype. Recent reports have suggested that a significant and perhaps imminent shift in the exchange rates of the IQD and VND could be on the horizon. If accurate, such a transformation could have profound effects on both regional economies and the global financial system. These reports include unverified but widely circulated claims that Bank of America, one of the most influential financial institutions in the world, has acknowledged revalued rates of $7.90 for the Iraqi dinar and $450 for the Vietnamese dong. While these figures are not yet confirmed by official government agencies, their mere appearance in financial discourse has sparked widespread speculation, excitement, and, in some circles, even concern. Adding weight to the rumors is the reported involvement of the U.S. Treasury, which, if true, would indicate this is not mere speculation, but potentially part of a broader and coordinated global financial shift. Historically, discussions of currency revaluation, especially of IQD and VND, have existed on the fringes of mainstream financial analysis, often dismissed as hopeful speculation or conspiracy. But as reputable institutions and major players begin entering the conversation, the possibility of a real systemic shift begins to seem more plausible. Revaluation, by definition, refers to a significant upward adjustment in the value of a country's currency relative to others. It is a powerful mechanism, often reflecting changes in a nation's economic fundamentals, policy direction, and global standing. For investors and economists, the idea of revaluation has always been particularly captivating when it involves emerging markets like Iraq and Vietnam, where currencies are believed to be artificially suppressed due to outdated systems, geopolitical risk, or restrictive monetary policy. In Iraq's case, the transformation has been years in the making. As one of the world's top oil-producing nations, Iraq has a strong natural economic base in its vast hydrocarbon reserves, which continue to generate substantial government revenues and contribute positively to the country's balance of payments. However, Iraq has not solely relied on oil. The Central Bank of Iraq has pursued a series of deliberate and comprehensive reforms, including increasing foreign reserves, tightening monetary controls, and investing in digital financial infrastructure. These efforts are not merely technical. They aim to increase transparency, reduce corruption, and align Iraq's banking system with international standards. Iraq is also actively working to reduce its dependency on the U.S. dollar, a bold and strategic move in a world where financial multipolarity is becoming more pronounced. Despite ongoing challenges such as political instability and infrastructural shortfalls, the fundamental economic indicators tell a story of growth, reform, and increasing readiness. If a revaluation were to occur, especially at the scale of the rumored $7.90, it would be seen as a recognition of Iraq's economic sovereignty and reform efforts, a milestone not achieved overnight, but through years of methodical groundwork. Vietnam's rise is equally compelling, though shaped by different dynamics. Over the past 2 decades, Vietnam has gone from being a marginal participant in global trade to becoming a key manufacturing and export hub. Major multinational corporations such as Apple, Samsung, Intel, and Nike have poured billions into Vietnam's workforce, infrastructure, and technology sectors. This has positioned Vietnam as a global leader in electronics, textiles, and machinery exports. Yet despite this impressive growth and increasing integration into global supply chains, the Vietnamese dong has remained severely undervalued. This persistent undervaluation has puzzled economists and frustrated investors, especially given Vietnam's strong fundamentals and growing attractiveness to foreign direct investment. While some argue that a lower currency helps maintain export competitiveness, others insist that it no longer reflects the country's actual economic performance. As Vietnam continues to modernize its financial systems, open its markets, and deepen its international trade relationships, the case for a currency revaluation becomes stronger. The rumored rate of $450 per VND may seem extraordinary at first glance, but in the broader context of financial realignment and economic rebalancing, it can be viewed as a possible correction, not an outlier. If realized, such a revaluation would not only represent a financial windfall for currency holders, but would also signal Vietnam's arrival as a major economic and financial player in Southeast. The reported involvement of Bank of America in these developments introduces another level of credibility. As one of the largest and most connected financial institutions in the world, Bank of America has access to privileged data, communications with regulatory bodies, and insight into global monetary planning that the average investor does not. If internal reports from the bank are acknowledging such specific exchange rates, it could suggest a degree of insider awareness or early alignment with future policy moves. Moreover, if the U.S. Treasury is involved, as has been suggested, that indicates state-level coordination that goes far beyond market rumors. This may point to something much larger, a deliberate recalibration of global monetary values. Discussions of a so-called global currency reset have circulated for years, with proponents arguing that certain currencies, particularly in resource-rich or industrially vital nations, have been artificially suppressed. This suppression, they argue, is the result of outdated financial frameworks, legacy debts, and international monetary control. With current global trade dynamics shifting, and as emerging nations pursue financial sovereignty, the potential for realignment becomes more plausible. One major trend supporting this idea is the global move toward de-dollarization. Countries and alliances such as BRICS, Brazil, Russia, India, China, and South Africa, are actively seeking alternatives to the U.S. dollar for international trade and reserves. Iraq and Vietnam, while less vocal, have been aligning with this movement. Iraq has begun transacting oil in alternative currencies and has strengthened local banking regulations to support the IQD. Vietnam is pursuing regional trade agreements that promote local currency use, particularly with China and ASEAN partners. These strategic moves are aimed at increasing monetary independence and could be the very foundation for revaluation. If the rumored rates are confirmed, the implications go far beyond wealth redistribution. This would mark a foundational shift in how currencies are valued, how power is distributed, and how nations assert their economic independence. For those who have held IQD or VND for years, this would be more than a financial gain. It would be a validation of belief, patience, and strategic positioning. At the same time, cautious optimism is warranted. Should a revaluation occur, it will likely be implemented in phases with stringent documentation, taxation, and regulatory oversight. Sudden financial windfalls, especially of this magnitude, can be overwhelming. The next challenge after acquisition is responsible wealth management, something that requires legal compliance, strategic planning, and emotional discipline. Preparation is key. Investors must begin now by ensuring all documentation is in place: proof of purchase, certificates of authenticity, government-issued ID, and tax documents. Exchanges should only be conducted through licensed financial institutions. Unverified forums, unofficial brokers, and groups promising insider access should be avoided at all costs. Understanding the official exchange process is essential, as is staying updated through reliable channels such as the Central Bank of Iraq, the State Bank of Vietnam, the U.S. Treasury, and top-tier financial firms. Equally important is the need to seek professional financial guidance. A sudden influx of capital brings with it complex responsibilities, from tax obligations to estate planning and diversification strategies. Certified financial planners, tax attorneys, and wealth advisors are trained to help individuals protect and grow their assets while ensuring full legal compliance. These professionals can guide investors through the creation of trusts, investment accounts, and wealth structures that promote long-term security and intergenerational prosperity. Globally, we are witnessing the emergence of a new financial paradigm. Long-standing power structures are shifting as emerging economies modernize, digitize, and assert their independence. Currencies like the IQD and VND, once ignored or undervalued, are being reassessed through a new lens. one that considers domestic performance, strategic alignment, and global utility over historical dominance. The signs are increasingly difficult to ignore. We've seen structural reforms, digital infrastructure development, increasing foreign reserves, and high-level coordination among financial institutions and governments. While official confirmation is still pending, the trajectory suggests deliberate movement toward a major monetary event. What was once speculative theory now has tangible indicators, from policy reforms to institutional engagement, suggesting that the conversation is moving from the margins to the mainstream. At Iraqi Dinar Info, we understand the difference between responsible speculation and empty hype. That's why our focus is on providing accurate, data-driven reporting and deep analysis for those tracking this historic development. We remain committed to offering tools, updates, and actionable intelligence for our readers to make informed decisions in a rapidly evolving global environment. As momentum builds, staying informed is more than a suggestion, it's a necessity. Like, share, and subscribe to remain updated on developments in currency revaluation, international finance, and strategic investment. This may very well be a once-in-a-generation opportunity, but seizing it won't come down to luck, it will come down to preparation. The financial world is changing. Don't just watch from the sidelines.